Okay, so we are at the cost of sales, of which the cost of sales is equal to the opening stock plus purchases minus the closing stock. So the opening stock is, how much is the opening stock? 8820. So you can have it in the middle column there, 8820. It's 20. Then we add purchases. Purchases. How much is our purchases?
168,000.
Ziko wapi sizioni? Oh, yeah, 168,000. So we have them, we add them in the inner column there. And then we have some returns outwards. We're supposed to deduct returns outwards from purchases. So how much is our returns outwards?
1036.
Yeah, 1036. We deduct from purchases. That is 1036. Do you have carriage inwards? I did not see carriage inwards. If we have carriage inwards, we add them to purchases. Carriage inwards. No carriage inwards. So the only adjustment for purchases is returns outwards. So we deduct returns outwards. That is from purchases, that is 168 minus 1036. So therefore our purchases is 166,964. And then we less closing stock. But there is an additional information number 4. So Kanduli's family had taken for its own use and as gifts to relatives and friends tires costing 1,750 million, but no record has been made of this in the books. So this is an additional information. This is something that ought to have been recorded in the books, but it was not recorded. So it needs to be adjusted for. So these are drawings. So Kanduli, you remember that Kanduli is the owner of the business, and the business is in the business of selling tires. So Kanduli took out, according to number 4, Kanduli took out for his own use out of the stock 1750 tires, but no record has been made. So these were drawings, yeah? Sawa. So he withdrew. Tuko pamoja wanyama wako hapo? So yeah, so these are goods that he withdrew. And whenever goods are withdrawn, we credit purchases account. Whenever goods are withdrawn by the owner of the business for his personal use, we credit purchases account and debit drawings account. I don't know, you remember that example you had done that particular day? Anyway, we said that whenever goods are withdrawn, we credit purchases account, we debit drawings. Sawa. Tuko pamoja?
Yes.
Yeah, so these drawings, now that you are at the point of preparing the final accounts, we're supposed to deduct them from purchases. Yeah. We deduct them from purchases. Tuko pamoja kila mtu ama swali bado iko? So we less drawings.
Alafu, excuse me.
Yeah. Yes, I'm.
Drawing.
Yeah.
Huwa ina affect kwa balance sheet huko penye tutaenda
Yeah. So pia hii drawings tutaipeleka kwa balance sheet. So keep that in mind. Once you get the balance sheet, these drawings will have to be there. So nisisahau, in case nisahau mnikumbushe. Yeah. So these drawings should have been credited in the purchases account. But since they were not credited, we need to credit them now. And to credit the purchases account means to reduce. You remember the concept of double entry? Whenever when an expense is decreasing, we credit. So to credit an expense means to reduce. So therefore, the same effect as reducing drawings from purchases, and the amount is 1750. So then now we will have our purchases figure, which will be equal to 168 minus 1036 minus 1750. Yeah. So you note that the figures are in thousands. Eh? The figures are in thousands. Yeah. So what we have here, like for instance, the bank balance 371 is supposed to be 371,000 shillings. 371,000 shillings, and that's what is in the additional information. So in the additional information, these figures have not been maybe rounded off. They have not been, they are in full. But in the trial balance, the extra 3 zeros have been put off. So please note that. So now we are together that purchases, the amount is equal to 165,214. Sindio?
Yes.
Yeah, then we list the closing stock. Closing stock, you will normally find it in the additional information. And the closing stock is how much?
Excuse me,
Yeah.
Mr. Kumemi.
Yes.
What if in case the drawings ilikuwa imeindicatiwa kwa account, bado tena tungeweka hapa ama tungepeleka tu?
Hapana, hii tunaiweka hapa because it's an additional information. Sawa. If it was the normal drawings here, like you see, like the one that we have here, 6100.
Yeah.
This 6100 has already been taken into account. In the during the year, in the ledger. Already wali debit hii kwa drawings na wali credit either cash or bank or the purchases. So hii itaenda tu kwa balance sheet. But if there is any extra, any from the additional information, this one which is not in the ledger, it needs to be added. It's only that now, for exam situation, we are not going back to the ledger. So you're not going back to the ledger to debit drawings because that will be a lot of work for us, say in an exam situation. You not go back to the drawings to debit and then go back to the trial balance and then prepare the final accounts. It will take a lot of our time. So we therefore go straight to the profit and loss account and show the working there. Sawa.
Okay, thank you. Nimeelewa.
Sawa. So that is our cost of
Yes.
okay. We are now deducting closing stock. Closing stock is 10. It's 10,276, yeah? Yeah, so we deduct minus 10,276. So our cost of sales will therefore be, that is the opening stock plus purchases minus the closing stock. Yeah, so that is 8820 plus 165, 214 minus 10,276, which will give us 8820. It will give us 1063, 758. So this 163,758 is our cost of sales. So this cost of sales, yeah. So we deduct them from the net sales to give us the gross profit. Give us the gross profit. So I put the cost of sales, that is 163, in brackets to indicate that you are deducting. So the gross profit will therefore be 258,048 minus 1063, which is now 94,290 is our gross profit. 94,290 is a gross profit. Sawa sawa. Then the next thing is to get now we look now for the net profit, and the net profit is equal to the gross profit plus other revenues minus other expenses. So do we have other revenues? So on the credit side of the trial balance, any other revenue? Any other revenue? I don't see any other revenue. But we said, okay, from the video that I sent you, that the provision for bad and doubtful debts, if it decreases, we treat it as a gain to the business. And a gain is treated the same way as a revenue in the profit and loss account. So when the provision for bad and doubtful debt decreases, we treat it as a gain or as a revenue. And if it increases, it goes up, we treat it as an expense. Sawa sawa. So we've been told in the additional information number 8, we adjust the provision for bad and doubtful debts to 10% of the balance of trade debtors outstanding at the end of the year. So we need to look at the provision for bad and doubtful debts after adjusting for this to see whether it will increase from the current 500. Sawa sawa. Kila mtu?
Yes.
Okay, we need to see whether the provision for bad and doubtful debts will increase. We've been told to adjust 8 to 10% of trade debtors. So do we have any bad debts, information to do with bad debts? No bad debts. Then now it's easy for us now to tell the provision for bad and doubtful debts. So let me have a working here, workings, provision for bad debts to be carried forward to the following year. We've been told should be 10% of current debtors, of which the current debtors is how much? In the profit and loss account, in the trial balance, it's 1090. 10,920. So 10% of 10,920 is, that should be equal to 0.1 times 10,920, which is 1092. So 1092 should be is now the provision for bad and doubtful debts as at the end of the year. And the provision, yes, Gishuki?
Opening stock.
Sorry?
Opening stock.
Nini?
Hapa kwa
Gishuki?
opening stock. Hapa kwa opening stock.
Yeah.
Then you have to add purchases.
Acha niongeze volume kidogo, sikupati vizuri.
Stock.
Hapo kwa opening stock?
You add purchases.
Yeah.
With minus. Financial admin.
Sorry?
Hapa kwa opening stock.
Yeah.
Ukipata cost of sales.
Yeah.
In opening stock tuna add purchases.
Yeah.
Hatuja add hapa.
Purchases gani? Si purchases ndio hii.
Ni 168,000.
So tulisema to purchases we if there are returns outwards we deduct from purchases. Like in our case we have 1036, eh? We are deducting from purchases. If you see a figure in brackets, it means we are deducting tuna minus. So we less returns outwards from purchases, and also less the drawings of goods from the additional information from the purchases. So it will give us 165. That is 168 plus 10 that is minus 1036 minus minus 1750. It will give us 165 to 14. So this 165 to 14 is the net purchases, eh? And then,
Opening stock.
yeah,
Opening stock. Why are we not adding?
opening stock ndio 8820
Kwa nini hatuiadd kwa purchases?
tumeadd, eh? You see this figure here, 1063, 16, 163, 758.
Hatuja-add opening stock kwa purchases.
Tumeadd. Angalia hapa. Unaona hii 16 163 758. Eh? Tumeadd, unaona 8820 plus 165 214, which is now our purchases, eh? Minus 10 276 inatupatia 163. That is 8820 plus 165 214 minus 10 276 inatupatia 163 758. So you've added, eh? Yeah, sawa sawa. Sawa sawa, Geshuke.
Okay.
Okay. So back to any other question? Swali lingine? So tuendelee. So provision for bad debts. Tumepata as per this additional information number 8. We have been told to adjust 8 to 10% of the trade debtors at the end of the year. And the trade debtors tumepata tunaona ni 10,290. So 10% of 10,290 inatupatia now our new provision for bad and doubtful debt is 1092. Sio mnaona? Si ndio? Gishuki. Gishuki. Okay, kuna mtu bana jaribu try to mute. So then okay, the provision for bad and doubtful debts at the end is 1092. At the beginning it was 500. At the beginning it was 500 here. The provision for bad and doubtful debts. At the beginning it was 500. At the end of the year it's 1092. So it has increased. Kila mtu naona ime increase.
Linati.
Yeah?
Yeah.
It has increased. So it has increased by how much? By 592. So now that it has increased, we treat it as an expense or a loss to the business. So therefore, then in short, for this business of Kanduli, there are no other revenues. So you only have other expenses. And under the other expenses, we can begin even with this provision for bad and doubtful debts and say increase in bad debts provision. Increase in provision for doubtful ambayo tumepata ni how much? 592. Sawa sawa, kila mtu. Who else is here with me?
Yes.
Yeah, so increase. So we have our first expense, that is increase in provision for bad and doubtful debts, that is 592. So and then we have other expenses. So from the trouble, Then I'll have to mute you guys. Other expenses from the trial balance going downwards. We have is which one? Salaries and wages. Salaries and wages, and the amount is 17,255. Any additional information for salaries and wages? Additional information for salaries and wages. Number 5. Number 5, that on April 2008, wages of 2.240 million were paid on 6th May 2008. So this is Ikizungu. Okay, I muted you, but okay. So April. So we are preparing financial statements for the year ending 30th April 2008. But then we are told that the wages of April were paid on 6th May 2008. So that is to say that as at April 2008, the wages of 2.24 million were outstanding. So as at as at 30th April 2008, wages of 2.24 million were outstanding because they were paid in May. Yeah, so the period that is subsequent to the current period. So as at the current date, that is April 30th, the wages of 2.24 million are outstanding. So you have to adjust for this. So he said the effect of accrued expenses is that we have a gap. So this gap has to be filled, and we fill it by adding the accrual to the affected wage expense. So therefore we shall have salaries and wages 17,255. Then we add outstanding wages or accrued wages as we have. So outstanding. Sawa sawa kila mtu?
Yeah.
Yeah, so the outstanding wages of 2.24 million.
Yes.
Any other additional information regarding salaries and wages? Let's see. So I have it there. Prepare insurance, telephone bills. So no other, we have no other additional information for salaries and wages. So therefore, our total salaries and wages should therefore be equal to 1755 plus 2240, which is 19,495. So we move on to the, sorry, yes? Yeah.
See the outstanding wages is 2,240,000.
Yeah, 2,240,000. And I remember saying, the figures in the trial balance are in thousands. Unaona hapo juu? They're in thousands,
Yes.
Okay, hata hapa basi nafaa nifanye hivi. Hapa juu kwa hii yangu. Yeah. Ndio isilete shida sana. Hivi iko sawa?
Yes.
So that is to say that the figures here are in thousands. Sawa sawa. So this 2.24 million is thousand. This 2240 is in thousands. Sawa. So it's 2.24 million. Sawa.
Yeah.
Oh, okay. So the other expense we have is rent and rates. So rent and rates. Do we have any additional information for rent and rates? Buniangalilieni hapo. Any additional information for rent and rates? So I don't see any additional information for rent and rates, so we take it as it is, 9240. 9240. We move on to the other additional, the other expense is insurance. Insurance. Do we have any adjustment for insurance? Kama tuko pamoja. Any adjustment for insurance? We have number 2, prepaid insurance. Prepaid insurance. And we said for prepayments is that we have an excess in the affected account. There is someone who is akomali kuna makelele sana. Vile siwezi jua ni nani. Who could that be? Tafadhali kindly mute. Kindly.
Wait.
Caroline.
Wait.
Caroline Zame.
Yes.
Nasikia tu makelele, unaona niko na earphones, so inasumbua kidogo. So kindly go to a quiet place. So, insurance, any additional information for insurance? Yes, number 2, that is prepaid insurance. And we said for prepayments is that the effect we have an excess. So this excess needs to be deducted, yeah, because we recorded this prepayment in the affected expense. So it shows an overstatement. So to correct for this excess, we deduct. So therefore, insurance, prepaid insurance, we deduct from the insurance that we have here, 32, 34. Then we less what it's called, prepaid insurance. We less prepaid insurance, which is equal to 385 million. So minus 385. So minus 385, which will give us, so now our insurance will therefore be equal to 3234 minus 385. That is 2849. Sawa sawa?
Yeah.
Okay. Then we move on to the other expense, that is transport and traveling. And its amount is 8876. Any additional information for transport and traveling? Transport and traveling. Number 6. Number 6, transport and traveling. So included in the transport and traveling is 625,000 for Kanduli's personal travel and transport expenses. So this is a personal travel, yeah? It's not related to the business, but he charged it to the business. So we shall treat this as a drawing. Sawa sawa. We shall treat this as a drawing, yeah? So he withdrew from the services from the travel expenses of the business. Part of it was enjoyed by him for his personal benefits, so not for the benefit of the business. So this is like a withdrawal. So this should have been posted in the business by debiting drawings expense, and crediting the travel and transport expenses. So you ought to have credited the travel and transport what? expense. Credit the travel and transport expense. So crediting an expense means to deduct, to less from that expense. Sindio? Sindio kila mtu? So therefore
Yes.
less.
Yes.
Yeah, so therefore less drawings.
Yes.
So this will be another drawings that we have to deduct now in the balance sheet. So we'll add this to the other drawings. So and the total amount of this is 625,000. Any other additional information for traveling? No other additional information. So you put this in brackets. So I deduct drawings of 625. So that is 8876 minus 625. So the actual now transport and traveling expenses of the business is 9501. 9501 is the actual transport and traveling expense. Then we move on to the other expenses in the trial balance. We have loan interest and bank charges. Loan interest and bank charges, the amount is 1498. Any additional information for loan interest and bank charges? Buni angalilieni. Any?
Kuna.
Hakuna. So you proceed to the other expense. General administration expenses, whose amount is 4380. Any additional information for general administration expenses?
Hakuna.
Hakuna.
Yeah.
Move on to the other one. Stock, freehold land and buildings, plant and machinery. These are assets, so they don't fall under the profit and loss account. Then you have accumulated depreciation on plant and machinery that goes to the profit and to the balance sheet. Motor vehicles and assets, balance sheet, accumulated depreciation to the balance sheet. So it seems we have exhausted the expenses in the profit in the trial balance. So we move on to the additional information. What may we have left? Prepaid insurance, already equal. Prepaid insurance is already there. Telephone bills unpaid, do we have them? Are they captured anywhere? Telephone bills. Do you have telephone bills anywhere?
No.
In the trial balance, do you have telephone? Yeah, hii tulikuwa tumesahau. So you have telephone bills in the trial balance. That is telephone and postage, hiyo ilikuwa imesahaulika. Whose amount is 2695. Telephone and postage, 2695. So we adjust for this number 3. This is an accrual. For accruals, we said the effect of accruals is that we have a gap. This gap must be filled by adding. So we add what? Unpaid telephone bills. Which amounts to 511. We add them to telephone and postage, itakuja ngapi? 2695 plus telephone bills, inakuja 3206. So and then telephone bills. Have we captured number 4? Kanduli's family had taken for its own use. We've captured it, it's in the drawings up here, 1750. Wages, number 5, wages of 22,240 were paid on May. That one I've captured. Then Kanduli's personal travel of 625, that one is captured. The other item that is not captured is depreciation. So depreciation should be treated as an expense. So therefore we should have depreciation here together with the other expenses. So depreciation, first depreciation on plant and machinery. depreciation on plant and machinery. We've been told to depreciate plant and machinery at 20% on reducing balance basis. 20% on reducing balance basis. Hizi vitu si mmesoma kwa ile video?
Yes.
Yeah, so how do we treat this? So reducing balance basis, we charge a constant amount of depreciation, a constant rate on the reducing balance. And the reducing balance is obtained by deducting the accumulated depreciation from the cost value of the asset. So we deduct the accumulated depreciation from the cost to get the book value, which will now be reduced. And then we take the percentage of depreciation from the reduced book value. So in this case, let me have a show working here. Depreciation on, this is what? Plant and machinery. We have the cost that is on the depreciation on plant and machinery is on reducing balance basis. So the reduced balance will therefore be equal to the cost, the acquisition cost of the asset, which in this case is plant and machinery cost is 59,500. Sio tunaona kila mtu anaona hiyo? So it's 595. 59,500. Yeah, ni ngapi? 59,500,000. So 59.5 million, and the accumulated depreciation. So less accumulated depreciation. On the trial balance, the accumulated depreciation on plant and machinery is 20,150,000. You can all see that. 20,150. So 20,150 is the accumulated depreciation of plant and machinery. So therefore now its book value shall be equal, the book value shall be equal to 59,500 shall be equal to 59,500 minus 25,150, which is equal to 34,350. So 34,350 is the reduced book value of plant and machinery. So now you are told to reduce to charge depreciation on reduced balance basis for plant and machinery at 20%. So therefore the depreciation of this shall be equal to 20% of 34,350,000. Sawa. So which is equal to 24%, 20%. Yeah. So therefore the depreciation on plant and machinery shall therefore be equal to 20% of 34,350, which is equal to how much? 6870. Sawa sawa kila mtu?
Yes.
Okay. So therefore the depreciation on plant and machinery is 6870. So therefore you have it here, 6870. And then now the depreciation for the other item for motor vehicles. Motor vehicles is on straight line basis. It's on motor vehicles, not on straight line basis. So straight line basis from the video, you are told that it's charged on a straight line. It's called what? It's straight line method said what? For those who can remember.
Says
Yeah.
cost
It charges
the
a
value of
constant.
the cost
Yeah.
minus the scrap over
It's the cost.
the year given.
Okay, sawa. So it's the cost minus the scrap or divided by the
Yes.
working life. Yeah. Okay.
Yeah.
So that is true. And again, it said that under straight line method, we charge a constant amount of depreciation. So if it is 2,000, ndio tumepata kwa hiyo cost minus scrap over the working life, tupate ni 2,000. It means we will charge 2,000 kila mwaka mpaka ile siku hiyo asset itakuja kukua disposed of. So if it's 2,000, it's 2,000 forever. So it charges a constant amount of depreciation. And now in this case, you have not been given the scrap value of these motor vehicles. So therefore, the depreciation shall therefore be 10%. Maybe I can have it here. Shall be 10%. 10% of the cost of the motor vehicles, which is 54,820,000. Is a depreciation on motor vehicles on straight line basis, which is a constant amount. So kila mwaka watakuwa na charge that amount. That is the 10% of 54,820, which is 54,82 or 5.482 million is a depreciation on straight line basis. Hapo kila mtu tuko sawa, si ndio?
Yes.
Okay, sawa. So therefore we have those two depreciations on plant and machinery and motor vehicles. So in total the depreciation for the year is 12,352. 12,352 is a depreciation. And then any other expense, I think we have all of them. Sidhani kunao nimeacha. Kuna depreciation, kuna expense nimeruka. Let me check before we proceed. Salaries and wages, rent and rates, insurance, telephone and postage is there. That been left out. Transport and traveling is there. Loan interest and bank charges, they are there. General administration, they are there. Stockfield. I think I've exhausted all the expenses. So therefore, then I get the total of these expenses and then deduct them from the gross profit for me to get a net profit. So add all these expenses from 592 for increase in provision for bad and doubtful debt, plus 19,495, plus 92,40, plus that, plus that, plus that, plus that, plus that, plus that. So the total for the other expenses is equal to 63,300. Hapo kila mtu anaona hiyo?
Yeah.
Okay. So I deduct the other expenses from the gross profit. I put this in brackets. Kindly mwenye komali kuna makelele. I'm on my earphones. Eardrums zangu zisiharibike bana. So other expenses 6,300. 63. So other expenses is 63,113. We deduct them from the gross profit to get the net profit. So the net profit shall be equal to the gross profit, that is 94,290 minus other expenses 63,113. So that will give me the net profit. So therefore the net profit is equal to 31,177. Kila mtu Tuko pamoja?
Yes.
Okay, sawa sawa. So if you are not saying anything, kindly mute. Nisiharibike earphones. So next, we prepare the balance sheet. We prepare the balance sheet. Prepare the balance sheet. So it's Kanduli's balance sheet. As on when? 30th April 2008. So you have here the particulars. The amount in thousands. So okay, let me pull this one down a little bit. Bring it to accept. Okay. So we embark on Kanduli's balance sheet. So on one side of Kanduli's balance sheet, we have the assets, and we begin with the fixed assets. The fixed assets. So in this column, in the inner column, we have the cost. In the outer column for fixed assets, we have the accumulated depreciation. And then the outer column, we have the book value. The book value. So in the fixed assets we have here, we have freehold land and buildings. Whose cost is how much? Freehold land and buildings is 95,500. The accumulated depreciation of freehold land and buildings, we don't have any. We haven't been given the accumulated depreciation for freehold land and buildings, so it's 0. So therefore, its book value is 95,500. That is 95,500 minus 0. Hapo tuko pamoja? The book value of freehold land and buildings is 95,500. Then we have the, yeah? Sorry? Tuko pamoja?
We are taking the depreciation into the balance sheet again.
Yeah. I began with saying that the adjustments for the balance sheets to balance, they have to be adjusted twice. The duality concept of accounting. So kila kitu in accounting has to have a dual effect. Lazima i-affect hii side ya debit, lazima i-affect side ya credit. Sawa sawa,
Okay.
ndio balance kitu. Yeah, okay, in most cases something ni kama okay. One thing will affect another. Yeah. So that we have a balance sheet that will balance. It's like we have a debit and a credit. Sawa sawa. The duality concept. I remember I also revisited that, mentioned that in our first class when you were doing, there was that illustration for the balance sheet equation. There were those transactions we are looking at. So for each transaction, each activity in accounting will have a dual effect. It will affect one thing and it will affect another one. There has to be a dual effect so that we equalize the two sides of the balance sheet. Sawa sawa. The other fixed asset we have is plant and machinery. Plant and machinery whose cost is how much? 59,500. Tuko sawa? And then we have the accumulated depreciation for plant and machinery, which is from our trial balance is 2150. Kila mtu anaona hiyo? So the accumulated depreciation on plant and machinery at the beginning, it was 2150. And then in the current year, we have the depreciation on plant and machinery of 6870. So the depreciation on plant and machinery has increased by 2870. So rather what I mean to say is that the accumulated depreciation on plant and machinery has increased, will increase from 2150 plus 6870. So it will increase to, that is, it will increase to accumulated depreciation on plant and machinery, that is 2150. That is the accumulated depreciation at the beginning plus the depreciation for the year, that is 6870. Sawa sawa, which gives us now the accumulated depreciation on plant and machinery being 27,020. Kila mtu tumeona hiyo?
Yes.
Okay, so the accumulated depreciation for plant and machinery is 27,020. That is the accumulated depreciation in the trial balance, that is at the beginning, 2150, plus the depreciation for the year, 6870. It will give us 27,020. And then we have the other fixed asset, that is motor vehicles. Motor vehicles, whose cost is equal to 54,820. And then we have the accumulated depreciation for motor vehicle, which is equal to the accumulated depreciation in the trial balance at the beginning, that is 17,700, plus the depreciation for the year, which is 54,882, which gives us 23,182. Kila mtu, hiyo tunaona, si ndio?
Yes.
Okay. So we less this accumulated depreciation from the cost to get the book value. So for plant and machinery, the book value shall be equal to 59,500 minus 27,020, which will give us 32,480. And for motor vehicles, it's equal to, the book value is equal to the cost, that is 54,820, minus the accumulated depreciation, which is equal to 23,182, which is giving us 31,638. Sawa sawa kila mtu?
Sawa.
And then the total of fixed assets will be equal to 95,500 plus 32,480 plus 31,638, which is equal, which gives us 159,613. The total of fixed assets. Then we have the current assets. Current assets, we begin with stock. The order of permanency, we begin with the most permanent asset to the least permanent. So now the current assets, stock is assumed to be more permanent. So stock, the closing stock as on 30th April 2008 is 10,276. So you have it here, 10,276. Then the other current asset we have is from the trial balance.
Cash in hand.
Okay, cash in hand tends to be the least permanent, so tutamalizia na cash in hand. But you have trade debtors.
Yes.
Trade debtors is a current asset.
10,920.
Yeah. Trade debtors is 10.
920.
Okay. After trade debtors, okay, but for trade debtors, there's an adjustment. Trade debtors, we have the adjustment number 8. That we make a provision for bad and doubtful debts of to 10% of trade debtors. So this will reduce our nini. It will reduce the debtors figure. So and we found the provision for bad and doubtful debts to be equal to how much at the end of the year? We found it to be 1092. So we shall deduct it from the debtors. I don't know whether you are together.
Yes.
Yeah, so we deduct bad debts provision from trade debtors. Tulipata ni ngapi? 1092. It's 1092.
Muhammad nikupigia kelele.
Na hizo za kawaida hizo. Hadi na chat na toka.
1092 we deduct from trade debtors. So now our trade debtors now, the resultant trade debtors will now be equal to 10,920 minus 1092, which is 9828. Sawa sawa kila mtu. Hapo mmeelewa nimefanya nini?
Yes.
Okay. It's like only 2 students are active. Anyway, so after trade debtors, any other current asset? We have a bank balance that is on the credit side. Hii ni fuliza. In your overdraft. So it's not a current asset, yeah? The bank balance. We in agreement there? So bank balance in our case it's on the credit side, so it's a current liability. It's not a current asset. This is an overdraft, so we shall have it in the current liabilities. Short-term loan is a current liability. So any other current asset, stock already equal. So we have cash in hand, but before cash in hand, let us see whether you have some prepaid expenses. Do we have prepaid expenses in our additional information? Prepaid expenses. We have prepaid insurance. Seems I'm alone.
Yes.
Okay.
Yes.
Prepaid insurance is a current asset. You unafaa kurudia
Yeah.
kweli? Okay, sio lazima. So prepaid insurance is 385 is a current asset. The other current asset we have, the last one is cash in hand. cash in hand, which is equal to 3210. I don't know whether we have any other item that should be treated as a current asset. Stock is already there. Prepaid insurance, telephone is unpaid, so liability. Okay. I think I've exhausted the current assets, trade debtors, bank, short term. Okay, I think I've exhausted all the current assets. So the total of current assets is equal to 1076, that is for stock, plus 9828, plus 385, plus the total of current assets is 2369, 23699. That is the total of our current assets. So we add this to the fixed assets. That is 159,618 plus 23,699. It will give us the total assets. Total assets. Then we move on to the other side of the balance sheet. So we begin with the capital. On the other side of the balance sheet, we have the capital and liabilities. So we begin with the capital financed by capital. Capital ni ngapi? Capital ni 144,000.
Yes.
Okay. So less drawings. Less drawings. Drawings tunaambiwa ni ngapi hapa kwa trial balance? 6100, huh? So it's 6100. Yeah, so we have them. We have adjustments for drawings from the additional information. So you have number 4. That can really. Hii additional information ilikuwa inaongea kuhusu nini? You had taken tires. So number 4, I think there's something I deleted. Sikumbuki ilikuwa nini.
Yeah.
He had taken for his own use, I think tires, stock of tires. So let's drawings of tires. He had taken out how much? This one.
You deleted.
I deleted. But
Yeah.
tulieka ngapi? That was from the
7.
It was 1750, yeah?
Yeah.
Yeah, 1750. So less drawings of okay. Oh, this will not be deducted, but rather added. Drawings of tires, that is equal to 1750. Iko wapi hii? We had the additional drawings of 1750. And then oh, I did not delete the 1750. And then there is another additional drawings number. The additional drawing ilikuwa gani? Number 6. Add drawings from here. Number 6 from what? Transport and traveling.
Yeah.
Which is equal to how much? From transport and traveling, 625. Is also another additional drawings. So in total, drawings are equal to 6100 plus 1750 plus 625, which is equal to this plus 625. So in total, the drawings are is equal to 8475. That is 6100 plus 1750 plus 625. So 625. So those are drawings in total. Then we less net profit. Sorry, we add net profit. Net profit tulipata ni 3177. Si ndio? Net profit tulipata 3177. We add. So this should give us the closing balance of capital. Na itakuwa kubwa. So the closing balance of capital, which is equal to closing balance of capital is 183. Sorry, is equal to capital itself plus drawings of 8475 plus the net profit 183,652. Tuko pamoja?
Yes.
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 Yeah, we are together.
Okay, but I'm foreseeing a problem anyway. tuendelee. And then that is capital. Then next we have the liabilities. Do we have long-term liabilities? No, we don't have long-term liabilities. We have short-term liabilities. Short-term liabilities ambazo tuko nazo hapa ni gani? From the trial balance, we have trade creditors of 5768. Trade creditors. Trade creditors 5768. So we have them here. 5768. Other current liabilities we have are the bank overdraft of 371. Bank overdraft. The bank overdraft is equal to 371. The other one is short-term loan. Short-term loan is equal to 6475. Any other current liability? Oh, drawings, I should have deducted drawings. Yeah, drawings should have been deducted. I added. Am I alone?
Oh, we are together.
Okay, drawings should have been deducted. Nilikuwa nimekosea. 8475. Then the other item is the other current liability. Have I exhausted them? Short-term loan on the credit side. Yes.
We left the drawing, the one in the hiyo ya kwanza, alafu hiyo ya additional ndio tuta add.
Okay, now there are those two drawings that you've gotten from the additional information, yeah?
Yes.
Those were additional drawings that had not been recorded in the ledger. So they had to be added. They have to be added to the drawings, yeah? That's why you have added 1750 na tumeadd 625. Tukapata 8475, eh? And then the drawings should be deducted from capital. So you all understand that drawings they reduce the capital of the business.
Yes.
Then we deduct the 8475, the total of drawings from capital, in order for us to get the closing balance of capital. And then we proceed. Short-term loan. I don't think there is any other current liability. The other current liability we have is from the additional information from the prepaid expenses. The prepaid expenses should be treated as current liabilities. And the first prepaid expense we have is prepaid, no, it's not prepaid expense, but outstanding expenses. Outstanding. Prepaid expenses should be treated as current assets, and I think I listed one here, the prepaid insurance. Prepaid expenses should be treated as current assets. So outstanding expenses should be treated as current liabilities. So, and we have one here that is telephone bills. So telephone bills, which is equal to 511. So you can have them here, 511. The other outstanding expense is wages, outstanding wages. Outstanding wages to 2240. The other outstanding expense ni hakuna ingine. There are those two. Paid insurance, telephone bills unpaid, drawings yet shaka. Wages outstanding. So you only have those two outstanding expenses. So that is telephone bills and outstanding wages. So in total, the outstanding expenses 511 plus 2240, which gives me 22,751. So those are the only current liabilities that the business had. That is trade creditors plus bank overdraft plus short-term loan plus the outstanding expenses. So in total, this is equal to 5768 plus 371 plus 6475. Hai, imekuwa kubwa, plus 2751. So which 15365. So we add this to capital, we add 1575, 15365 to 166. Itatupea ngapi? 166,702 plus 15365. Tuko pamoja kila mtu? So this should give us the capital and liabilities total. Karen. Karen. That should give us the capital and liabilities, which should balance with total assets. But as I can see, it's not balancing. So shida iko. So it's not balancing with by how much? What's the difference? 183, 317 minus 1250. So it's not balancing by 1250. Where could 1250 have disappeared into? Nilikosea wapi? Karen.
Yes.
1250 imetoka wapi?
John.
Yeah?
Maybe.
Sorry? But you have understood the concept, yeah?
Yes.
Okay, let me find
Yes.
out where the problem is, then forward to you this Excel file, huh?
Excuse me.
Yeah.
Okay, yes.
Yeah.
Excused, yeah.
Hapa kwa short term liabilities, hapa kwa outstanding expenses.
Yeah.
Hiyo tunaweka kwa liabilities.
Gani?
Unaona?
Outstanding
Yeah, yeah.
expenses. Gani?
Expense inaenda kwa liabilities.
Outstanding expenses should are current liabilities, huh?
Oh.
Yeah.
Yeah. I remember giving an example of we haven't paid our employees, yet they have worked for us. You know that is an outstanding expense. So we owe them. So that's a current liability to the business. Any other question?
You will send this question and example to our WhatsApp group.
Yeah. Let me correct them error, and then I will highlight it in the one that I'll send to the WhatsApp.
Okay.
So. Any other question? Swali?
Excuse me, teacher.
Yeah.
About the other business, the introduction to microenvironment.
Yeah.
Mbona hatufunzwi?
Mwalimu amekuwa mgonjwa. But I thought nikidhani kuna class alifundisha jana. Hamna namba yake?
Tuko nayo lakini vile tu hatuelewi, yani the way forward.
Okay, amekuwa mgonjwa. He has been unwell, eh? So can you please call him, eh?
Sawa.
Sawa. Hii tofauti ya 1250 inatokea wapi? Any other question? Swali lingine? But the concept is clear.
Yeah.
Okay, sawa. Let me find out where the error is and I will send back to you. Okay, so jioni njema kila mtu.